Hi traders, Senior Account Manager Adam House here hosting the Daily European Open webinar this Wednesday 30th of the 8th, 2017. Once again, sorry for the delay. Just a short general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your personal needs or circumstances. Okay, so as always, we concentrate on the major pairs on the Forex market, being the AUD USD, the Euro against the US dollar. We'll just reset all these to daily timeframes. We've got the British pound against the US dollar and the USD against the Japanese yen. Got the pound against the yen. Also got oil, gold, and the ASX 200 as well. So let's take a quick look at risk events for today as well. Now, obviously, we have the economic calendar here on TradingView. Had a lot happen over the weekend on the Jackson Hole Symposium that occurred on the weekend just past. We had two of the biggest bankers in the world, Janet Yellen, the head of the Federal Open Market Committee, or the Fed, and Mario Draghi, the European Central Bank President. Now, they issued comments about monetary policy. In fact, Yellen was quite evasive, as was Draghi on their comments, but generally no real mention was made specifically about monetary policy, as many would have liked from Yellen over the course of the weekend, and that really sort of transpired into a lack of confidence on the US dollar in general. So we saw a big spike on to the downside over the course of this week. Obviously, the euro shot up against the weaker US dollar. Gold too had a massive run in response to that announcement, but equally what we saw as well was gold having a really impressive run on the recent missile fire test that occurred over Japan from North Korea. So again, as I said last week, we had multiple missile tests over the course of this month. It's as if a missile test has happened, and then the market is, seen bullish for gold and bearish for the US dollar, but then the market's recovered. Okay, and that's what we saw over the course of Tuesday, particularly, and early Wednesday, is that when North Korea did fire that missile, we saw the global stock market stumble off as a result. So stock markets across Asia yesterday ended lower, and in Europe, shares slumped nearly 2% to their lowest in 6 months. US stocks pointed to a significantly weaker open on Wall Street, with the Dow falling around about 100 points. So again, that just really demonstrates, that US is very, very susceptible to prevailing pessimistic conditions in the market, and gold sort of rises as a result. Now, what we're seeing technically now is obviously, on the daily time frames, we're seeing that recovery on the US generally. That's a bit of profit taking here at the lows. Some investors have got involved and started sort of taking profits, or starting to, sort of buy at these ultimate lows, which is what you should be doing in the market. But don't forget that the, prevailing conditions persist, in terms of worrying NK tensions with, proposed future missile tests. We can't say that for sure, but, it's not as if, the North Korean regime is going to be stopping that kind of thing anytime soon. So, bearing in mind, we've got obviously the North Korean tension, really sort of fueling the market at the moment. Correspondingly, we've got investors piling into safe havens like gold, the yen, and the Swiss franc around those geopolitical concerns. And the euro has been one of the most impressive performers of late. Obviously, we're coming up to a top in the market, sort of a recent record high of 120.60. There's been profit taking happening here, and the price has gone back down to 119.50 as we speak. This is despite really seeing the euro rising to its highest level since January 2017. Sorry, 15 rather, 2015. Even though Mario Draghi didn't express concern about its recent rise in his speech at the Jackson Hole Symposium, we have seen that rise to sort of, the fresh highs since January 2015. So what's in store for this week? Well, we've got additional economic announcements coming up tomorrow, later today rather. We've got the gross domestic product happening at 22.30 for the US dollar. Moving forward, we have a lot of German and Eurozone economic announcements coming out at approximately 5 to 6 and 7 o'clock. Bearing in mind this is Australian Eastern Standard Time. So we've got the German unemployment change and obviously the Eurozone Consumer Price Index as well. Personal consumption expenditure for the US at 22.30 on Friday. And then we've got the unemployment rate coming up on Friday for the US dollar, as well as the change in non-farm payrolls. So the non-farm payrolls is a massive one. We'll be commenting on that over the course of the next 2 days on the future webinars for the Daily European Open. Just bearing in mind that the last announcement for the payrolls was actually more than expected. But bear in mind that inflation for the US dollar has been quite low of late. That's led to less urgency on the part of the Fed to raise rates this year. And that's why that's been sort of transponded into a weaker US dollar in general. So just bear in mind that, 180K, we had the previous results of 209K jobs created, 180K forecast for last month. If we get more than that number, then we could see a spike in the US dollar in general against the other majors. But bear in mind that, the main focus will be, as it always has been, on the future guide of monetary policy. If we see inflation figures coming up later, in the month, if they support, or later next month, if higher inflation supports a hike in rates, and that's what the markets are going to be looking for. It's a very volatile event, the non-farm payroll, so just be careful around trading that event with obviously the use of proper leverage and the proper use of stops in the market as well. So looking ahead tonight, obviously we've got daily technical preferences here. We've got further upside preferred on the AUD US dollar to levels of 80.20, that's 0.8020 in extension. SPI 200 ASX, short positions preferred. Obviously there's been a bit of a sell-off today in response to that geopolitical concern. So short positions are preferred further on the ASX 200 to levels of 5610 and 5595 in extension. On the Euro US dollar, we have reached a top in the market here, so we may see a little bit of short-term bearish pressure. There are short positions preferred to levels of 1.945, which is not far away from where it is now, to levels of 1.1915 in extension. GBP USD, again, we've got short positions preferred to levels of 1.2910 and 1.2890 in extension. USD JPY, we have long positions preferred to 109.25 and 110.25 in extension. The pound against the yen, we have long positions preferred to 142.3 and 142.65 in extension. Gold has shown a little bit of bearish pressure after that top in the market. Short-term intraday targets are 1300 and 1296 in extension. And finally, we have crude oil with short positions preferred to 45.70 and 45.35 in extension. So bearing in mind, we've got a lot of events coming up for today and later this week. The market, sort of in the immediate term, will be concentrating on the GDP for the US, but more specifically on the non-farm payroll coming up later on Friday. So if you have any questions about that or anything else in particular about your trading, please get in contact with your account manager here at ForexCT, and we'll be happy to assist you. For the time being, thank you very much for your attendance,
and we'll be looking to helping you. Thank you very much. Cheers.